So, you're thinking about tackling the CFA's Certificate in ESG Investing. Smart move. In the crowded ESG space, this is the credential that really signals you know your stuff, especially if you're a finance or risk pro. It's the one that proves you get how ESG actually hits the bottom line. So let's open up the playbook and figure out how to crack this thing.
Okay, let's get one thing straight right from the very beginning. This quote, this is everything. You have to burn this idea into your brain. The exam doesn't care one bit about your personal feelings on sustainability. What it cares about is whether you can take ESG data and apply it to real-world financial decisions. We're talking valuation, risk, capital allocation, the whole shebang. This is a finance exam, period. And that idea is going to be our North Star today.
Which brings us to our first big point, the real challenge. And here's the thing, it's probably not what you expect. A lot of really smart, experienced people underestimate this exam, and there's a very specific reason why. It's not that the individual concepts are impossibly difficult, it's all about the way the exam forces you to think.
You see, unlike a lot of other ESG certifications out there, this one doesn't live in its own little sustainability bubble. Nope. It lives and breathes right in the world of capital markets. The questions are designed to test if you can translate a big concept, like climate risk, into a tangible financial impact. You know, what does it actually do to a company's cash flows, its discount rate, its credit profile? That's a completely different skill set.
And that leads us directly to the most critical part of this whole breakdown. Section 2, shifting your mindset. I'm telling you, if you can really nail this part, you are more than halfway to passing this exam.
Okay, so here it is, the #1 mistake people make. They walk into this thing thinking their passion for sustainability is going to be enough to get them through. It won't be. The exam is specifically designed to weed out that kind of advocacy and instead reward hardcore, analytical, evidence-based reasoning. This is the single biggest trap, and we're going to make sure you don't fall into it.
Let's just break this down because it's so important. On one side, you've got the advocacy mindset. That's where you just believe a good ESG score automatically equals a good investment. But the financial application mindset, the one you need, asks, okay, but how and when does that score actually impact the valuation? Is it even material? Same thing with climate risk. It's not enough to know it exists. You have to be able to draw a direct line from that risk to something tangible, like the company's cost of capital. This is the mental leap you have to make.
Okay, so with that new mindset locked in, let's talk about how you apply it to the actual curriculum. That brings us to Section 3. Decoding the syllabus. And the key lens we're going to use is this idea of decision usefulness. This question right here, this is your magic filter for everything you study. As you're reading about different frameworks, data sources, whatever, you have to constantly ask yourself this question. If you can't see a plausible path for how that piece of information could influence a financial decision, well then the exam probably isn't going to spend much time on it. It's all about practical application.
So when you open up the syllabus, you'll see these main building blocks. You've got the market drivers, data and reporting, integration into valuation for stocks and bonds, portfolio management, and then stewardship and fiduciary duty. The trick is to see these not as separate chapters, but as interconnected parts of one big system. The exam is designed to test if you can connect the dots, from market trends to data, from data to valuation, and how it all impacts your duty to your clients.
And here's a perfect example of the kind of thinking they want. The exam won't just ask you to define a weak governance score. No way, that's too simple. It'll give you a scenario and ask you to trace the impact. Does that weak score mean a higher chance of default, which would affect its credit risk? Does it mean investors are going to demand a higher return to own the stock, pushing up its equity risk premium? See? It's all about understanding the mechanism. All right, we've got the mindset and the method. Now it's time to get practical. Let's get tactical with Section 4, the winning study plan. It's a simple, 4-step approach to get you ready for exam day.
First up, a little reality check. The CFA Institute recommends about 120 to 150 hours of study. This isn't something you can just cram for over a weekend. It doesn't matter if you come from a finance background or a sustainability background, you will have gaps in your knowledge. So you've got to be honest with yourself and build a disciplined plan.
So here's the plan. Step 1, your first pass. Just read the entire curriculum from start to finish. Don't try to memorize everything, just get the lay of the land. Step 2, go back for a second pass. This time your mission is to actively make those connections we've been talking about. Step 3 is absolutely crucial. Practice questions. And treat every single mistake you make as a diagnostic tool. A wrong answer is a gift. It's showing you exactly where you're weak. And finally, in the last few weeks, you just reinforce those high-impact areas, like data limitations and the actual mechanics of integration.
So after all that work, what's the real reward? What's the point of it all? That brings us to our final section, why it matters. And trust me, this is about a whole lot more than just another certificate to hang on your wall.
Look, the market is absolutely flooded with ESG noise and credentials right now. This one cuts through. Passing this exam tells employers that you don't just know the definitions. It proves you have the professional judgment to apply them in a nuanced, financially grounded way. It proves you can separate the marketing from what's actually material. And ultimately, this is the real payoff. You're not just learning about ESG, you are learning to think like a modern investor. You're developing the skills to navigate a world where these factors aren't some optional add-on anymore. They are absolutely fundamental to creating long-term value.
In the end, going through this preparation doesn't just earn you a credential. It actually transforms your judgment. It hones your analytical skills for this new era of finance. So the only question that's really left is, are you ready to prove it?